Hello and good morning. Thursday, November 12th, 2015. It's about 5:30 a.m. here in New York. Let's take a look at the market and today's picks. Futures have been going from slightly up to slightly down in the pre-market. Yesterday's action was pretty light volume, as you can see in through here. Obviously, with the holiday, that's expected. So I think we probably find some support here soon, but I maintain this might be the area the market wants to go to before that happens. So you can see that previous resistance becomes support. So let's watch for it. That'll be the area where I start to get pretty aggressive to the upside again. I don't think that TVIX is going to work though, or UVXY. And the reason I say that is because, well, there doesn't seem to be a lot of fear, and probably shouldn't be, right? We've had a really sizable run, and the dip hasn't been scary like it wasn't through here. So usually the VIX trade works when it's scary, not just when it's trending. Okay, TVIX or UVXY, that's going to go down if the market is heading sideways, or sometimes even slightly lower. All right, the market really has to be falling fast for that trade to work. What I do like heading into the weekend, and this is really important to point out, is Gene. Now this one has broke the Fibonacci retracement levels, but we have to talk about the unique situation here. Huge volume for 2 days in a row. Right? Huge volume last week, 2 days in a row, over 10 million shares. Now, that huge volume collects big short sellers. When you're trading stocks across 1 to 4 days, I always want you thinking about where would buyers be coming into the trade and why. All right? You just absolutely always need to be thinking about where buyers are coming into the trade and why. The beauty of the Fibonacci retracement lesson is we can identify large amounts of volume very clearly on the chart, and we can identify a pattern very clearly on the chart. They usually go up for 1 or 2 days, sometimes 3, and then they come down to a level that we want to buy. Determining that level is key to making a big return in a short period of time. Now, again, this one has broke the 3 levels we want to see it hold, but that doesn't change the fact that it had huge volume to the upside, which attracts big short sellers. Going back to, we always want to know where people are going to buy a stock. If we know with a very high degree of certainty that this has collected short sellers in through here, wouldn't it be safe to determine that it has a high probability of bouncing somewhere soon? Because those short sellers who piled in the upper threes now are up a lot on the trade. If they go to cover their short, they are a buyer. So again, we want to know where buyers might come in, and large amounts of them. So one thing I see on this chart that really interests me and why I think I'm going to buy it today is that right there. Support, and then a bounce. Comes in, tries to make support there and breaks. Once it breaks that area, which is about 240, that becomes resistance and it turns down from there. Then it puts in a new channel right there. Pops 1, 2, and then explodes. Collects the shorts. And so now, wouldn't this look like a pretty reasonable spot to give the stock a try? It's collected shorts. I'd like to think of that as like an Easter basket, all right? So we have an Easter basket, and we're collecting those shorts in the basket. You know, the stock is falling, or the eggs are falling into the Easter basket. If that basket bottom holds those eggs, all right, if it holds those shorts at a good support area, those shorts are going to look to button up their trade. Usually this can happen before a weekend. So this one could be setting up for a 240s to $3 move, 10,000 shares, 60 cents a share, possible profit, $6,000. I'll take that heading into the weekend, wouldn't you? So that's what I'm watching. That doesn't mean it's going to work. If it blows right through the 240s today down to 210, sure, we can watch for the same bounce, but today probably isn't the day that I want to buy. All right, we never want to catch a falling knife. We want to see if that basket bottom, or in this case, if the stock kind of rounds out here or puts in a doji here or just simply trades sideways here intraday and we anticipate that it's going to bottom or doji out. So watch that one right there. But that I just really want to dig into the why of things. So you start to look for these things, the why of things. For example, right in through here, see this big pop, 1, 2. So it goes from 280s up to $4. Look where it squeezes. It's a short-lived squeeze, but look where it squeezes. And that's all you need. You don't need a long-term squeeze. You don't even want one for that matter. You don't want to be in for a long period of time. Look how it goes from the 280s again up to the 330s. 50 cents a share, 10,000 shares, 5,000 potential profit. Look how hard it was to hit that bounce though. It just drifted. 2-3 weeks of drifting before it makes that bounce. Not an easy, clean setup. This is an easy, clean setup. If it curls at 240, I will try it because if 240 breaks, I'm out. Maybe I try it again at 210 later on, but I don't want to ride it from 240 down to 210. So at this point in time, before we see today's price action, it's giving us a really tight stop loss. In above 240, out slightly below 240, retry it down at 210 or not at all. That's what I'm watching on Gene today. Range is to 3 before resistance. NFI is momentum stock. All right, this was heavily shorted in through here. Some big time short sellers moved in on it. We actually tried to play the bounce in through here and we had some success right there. We played that candle over candle if you recall. You can check the trade journal. I was in and out of that stock back there on August 21st to 22nd or 24th. So it looks like a Friday into a Monday. Right. And then it slowly works its way higher. And through here, they have really good news. Now, there's a lot of range on this stock to resistance at 10. So I would say where are the buy zones? And that's really what we want to dig into right here. The buy zones, if you go to let's go to a 3-minute 3-day. Actually, I already had it drawn on the 1 minute, so that'll be fine. The buy zone on this one would be around $7. That's if we're going to apply Fibonacci retracement. And I think a 50% move qualifies. All right, so let's look for this around 7 or even 670 heading into the weekend. Now, if it doesn't come down to those levels, it's okay to move up. All right. So again, 7 or 670. It's okay to move up. We'll use something like 740. Let me go ahead and grab the, I already have it. We'll use something like 740 as a pivot. So that means you're basically buying above here because it's shown that it's holding above here. And then you're selling if it goes below there. And you're looking for 760 to 10. 5,000 shares, $2 per share, 10,000, what? 40 cents, 12,000 potential profit there if it goes to 10. And you're watching how it chops out at 820 because that hit twice yesterday. And that's where it'll collect shorts. This one is already over a macro time frame heavily shorted. Sure, it's been trending for a while, but this was the first good squeeze on it. Over, 7-8 million shares traded. It's a lot of money. So those are the buy zones on that one there. That's ANFI. Again, really making an emphasis of pointing out why I want to buy it and exactly where and where I would get out of the trade. All right, that's probably the most important thing. All right, we all understand SIEN's troubles. All right, this is a good company. They beat on earnings every quarter since the IPO. And then they ran into some really bad news. And then they ran into more bad news. And now we're starting to see a base. And so if I dial this into 30 days, this was a really big bounce in through here. All right, really big bounce. I missed it, unfortunately. I think it was 360s all the way up to 520s. But now we have a more clear setup. The only concern on this more clear setup is this big candle in through here. It went from an open of 450 to a close of 390. That's 50 cents a share, 10,000 shares. That's a $5,000 loss, and it happened fast. The volume was higher. What we need to take into consideration is that it had a bounce, and it drifted lower for 3 days and finally let loose. What's important to note is that yesterday's price action at 393 is candle over candle. in a higher low pattern. So you have your lows in through here that are established, and those are in the 360s. And then you put in a 385 low here. So despite the bleeding, that bleeding stops above the 360s. Then it puts in a doji on very light volume, illustrating that some buyers are stepping in here and sellers don't necessarily believe it's going to go below here. Otherwise, they'd be getting out of the trade. So this maybe is some short sellers pounding on the downward momentum, some people exiting the stock who bought in through here or even in through here, and now a new round of buyers possibly here with upside range into the 5s. Stop loss here is below 385. That is 8 cents, tight to the button. So 385 is the low here. The close was 390. Yesterday's close was 393. The low was 386. Perfect candle over candle setup with a lot of upside range. Got to be disciplined and use a stop loss because this shows the ability to crack support and run down hard. Now, this was a bad news day here, but you get my point. All right. Those are the 3 trades that I'm looking to buy today. And yes, I will be trading today. So let's be watching for these here or anything else that presents a good opportunity. Take it easy, my friends. I'll see you in the chat room.